All of the analysis that I'm reading in the newspapers this morning is talking about the prospect of interest rates at zero, maybe even negative. Yesterday, New Zealand cut their interest rates, their official interest rates, by 0.5%. It sent the Aussie dollar plummeting further. It's now down trading in the sort of mid 66 cents per US dollar type range, which is another record low in the last decade. Are we all in the Western world, or everywhere, are we all just creeping down towards 0% interest rates or even below? Some places, like Japan, have had 0% interest rates, negative interest rates for years. Are we about to follow them in Australia? If we are, what does that mean for you? What does it mean for savers? It doesn't sound very good for savers. It sounds as though you're telling, you're basically giving your money to the bank and paying them to look after it for you. If you're a mortgage holder, any chance you can get effectively an interest-free loan coming up? Martin North is the principal at Digital Finance Analytics. Martin, good morning.
Hello, Gareth.
Appreciate your time. Are we heading towards 0% interest rates in your view?
Well, there's no doubt in my mind that around the world, the central banks are beginning to panic because essentially the global financial crisis a decade ago is still resonating down the years. Nothing has fundamentally changed, and now we've got another, downturn. And the problem is that last time around they were able to cut interest rates by 5 or 6% to stimulate activity in the economy, but rates are so low now. So the question is, what do? Do they effectively take rates below zero in an attempt to try and kickstart the economy around the world once again? But there are a whole bunch of consequences and implications of going into negative interest rate territory, as you've sort of highlighted, and both for lenders and borrowers and people with savings, this is a whole new world.
Yeah.
Not a very good one. And frankly, this experiment, which is what it is, has not proved yet to be successful. So you say Japan, over in Europe where they've got some negative interest rates, it hasn't changed anything. So the real question for me is this a clever strategy or is it a dumb strategy?
Okay, well let's go through it. What's the idea of cutting interest rates to zero or even to negative? What's it supposed to do?
Okay, so the idea is that people are, because of the economic uncertainty that we are, prefer to sit on their savings or on their investments rather than put that money to active use in the economy to try and effectively stimulate it. Banks were the same. So in Europe, for example, the governments around Europe handed money to the banks, say, here's some money, very cheap money, go lend it. But the banks didn't, they sat on it. So effectively what they're trying to do is to penalise the banks for not lending that money and putting it into, quote, productive use, unquote, in the economy, right? So it's trying to get more economic activity, and it's penalising people who are holding savings and saying, if you hold savings in the bank, in the negative interest rate environment, it's like a tax on your savings. The value of those savings will go down unless you can put them into productive use, and that could be other forms of investment that perhaps are more risky, or even buying a property or something. That is regarded as a productive use, whereas just money sitting in the bank is not seen as productive. Now, I've got a problem with that because actually many people will have spent many, many years building that nest egg to protect them, for example, into retirement. And then suddenly the rules are changed and suddenly the value of that nest egg is going down, not up. Deposit rates are already very low even now.
Yeah.
But it could get to the point where effectively if you keep money in the bank, the value is eroded.
Okay, so that's the savers side. What about of the mortgage borrowers side? I mean, can you foresee? I mean, most people, I think, if you've on a flexible interest rate, you're probably getting letters from your bank at the moment saying, look, we've cut your rate to sort of 3.5%, 3.6%, 3.4%, that sort of range. Is it realistic to think that at some point we might be able to get home loans with 0% interest?
Well, generally what's happened in negative interest rate environments is that the mortgage rate has gone down to sort of a 1.5 to 1% and is stuck there because there are still costs in the system for making the loan. But there is an example in Sweden of a 30-year mortgage where they will pay you to take that mortgage.
Wow.
Which is only a very small amount of, 0.05 or 0.03%. But basically, they are so desperate to try and get people to take money to go and buy property and do other things that they are actually, in that environment, stimulating it by offering that incentive, which is nuts. I mean, it sort of turns basic economics on its head, isn't it? Because essentially, if you're borrowing, generally you pay for that, and effectively the interest rate is to cover the risk of that borrowing. Whereas if you're saving, you are expected to get a return on it, and it's turning the whole thing on its head. Like I said, this is an experiment, and there isn't a lot of evidence to suggest that this experiment actually is going to work.
So, I mean, how do I get one of these Swedish home loans? That's my first question.
Move to Sweden.
They won't lend to us a modest family home in Perth, Western Australia?
No, and there are some other rules and things attached. I mean, that's really right as an outlier.
Yeah. But I mean, this is the way it's going, isn't it? I mean, if you had have told people even 5 years ago that mortgage interest rates in Australia will be down below 4% and below 3.5%, they would be surprised by that.
Yeah, so we've got to the point now where the amount of debt in the system is just ginormous, right? We've never had so much debt locally, we've never had so much debt internationally, and what the central banks are trying to do is to keep this debt bomb ticking over a bit further and not hoping it doesn't go off on their watch, basically.
Yeah. But I mean, aren't you also encouraging people to take on even more debt? I mean, don't you just add to the scale of the debt mountain?
You do, and of course what's happened in Australia in the last 6 months, we've had various incentives, the APRA changes to the rules and the lower interest rates, all trying to get people to take more debt. Now, the problem is we're debted out here, we're debted out around the world, and ultimately there is a limit, a physical limit to how much debt the system can manage, right? And I think we're very close to that now, and that's why a lot of this strategy is not actually being very effective. So effectively, my view is that these interest rate levers are broken now, and you can pull them, as hard as you like, but it's not necessarily going to change the economic outcome. We've got to the point now where if you think that negative interest rates could go down 2, 3, or 4%, that's the sort of range that the IMF, for example, is talking about in some of their papers, that will be required to provide any sort of stimulus to get us out of a crisis. And frankly, if you look at the international news today, there are crises beginning to pop up in a number of different places.
Bubbling all over the place.
Yeah, so this is a real critical debate to have, and I just worry that we are actually, in a way, sleepwalking into this negative interest rate world. And I should just say one other thing. There's a bill in Parliament now to reduce cash transactions. Anything over $10,000, you can't use cash to make those transactions, and it's talking about it in the context of the black economy. But the IMF says unless you get rid of cash out of the economy, negative interest rates won't work, because people will just take the money out of the bank and will hold money out of the banking system in notes or other forms, because you don't lose value. So there's a really big, interesting question here about how money is going to work in the future in the negative interest rate environment. Okay,
can I take a different angle on this? What it seems to me the economy in this country is crying out for is activity, a bit of stimulus, bit of activity, bit of confidence. If interest rates are really, really low, near enough to zero, what would be, and this goes counter to what we've been thinking about with the way that governments manage our money on our behalf, but are we getting to the point where it actually makes sense for governments to borrow enormous sums of money, lock in through 30-year bonds or whatever, interest rates that are close enough to zero, and go and spend that money on building some infrastructure, some productive infrastructure? I'm not talking about wasteful projects, but I'm talking about ports and bridges and railways and freeways. Given that the interest rate penalty just isn't there at the moment, does it make sense for governments to go out and borrow some money at long term and just go and commit to some projects to at least get people working again?
Yes, and that is a well-known and now quite well-articulated strategy. It's called MMT, Modern Monetary Theory. And basically what it says is with interest rates so low, there is a crying need for infrastructure investment, real proper investment that's going to create long-term value in the economy. And because, interest rates are so low, it makes sense. There are candidates in the US in the upcoming election absolutely, saying this is the way to do it. And I think we're going to see this begin to emerge as an alternative suggestion to deeply negative interest rates. But of course, the issue with debt is it still has to be repaid. And of course, the government is very precious about its surplus, right? And I think we've got an interesting cross-current between effectively the political view of it, which is we want to keep a surplus, we don't want to go deeply into debt, and the real economic situation that we're in, which is we do need stimulus, we do need investment, not more property, not more housing bubbles, but real infrastructure investment in, real things that will make a difference, a long-term difference for Australia. That's the debate we should be having, but unfortunately, because of where the political language is at the moment, I don't think that debate is actually running as the way it should.
Okay, Martin, fascinating stuff. Thank you for your time.
Good to talk to you.
Martin North, Digital Finance Analytics. So we are entering the era of hyper low interest rates. Is this a good thing or a bad thing? 92211882. It probably depends if you're a borrower or a saver. And if you are a saver, if you are trying to provide for your retirement, what do you do? Where do you go? What do you do? Where do you put your money to try and encourage some returns, to encourage some growth rather than erosion of your money? It's a really interesting era that we're in. What about the idea of governments borrowing up big, given that interest rates are so low? Lock them in at zero, borrow up big now, stimulate the economy, at least get some things happening. Will it bring some confidence back?